Welcome to FinTech Town Square, your ultimate guide to navigating the dynamic world of financial technology. I'm your host Nihit, and I'm here to empower a new generation of cross functional leaders who can drive innovation at the intersection of finance and tech. Our guest today is Iwan Kurniawan, who is the Chief Growth Officer and Indonesia co founder of funding societies Modalku. Founded in 2015, Funding Societies Modalku has facilitated US $3 billion of financing to 90,000 small and medium enterprises and is funded by global investors such as Sequoia Capital and SoftBank. Prior to Funding Societies Modalku, Ivan was a management consultant at global consulting firm Oliver Wyman, and he's a graduate of Cornell University. Today he's here to share his journey and insights with us. In this episode, we'll delve into how Ivan's thirst for learning has fueled his innovative approach to solving problems, the importance of risk management in the lending industry, and how he navigates the long tail events that can make or break businesses in finance. We'll also get his perspective on the talent gaps in the Southeast Asian fintech industry and how to address them. So, without further ado, let's welcome Ivan Kurniawan to the FinTech Town Square. Thanks, Ivan, for speaking to us. You agreed to speak to us on a weekend. So really appreciate you for giving that time to us, and really appreciate that you have been also connecting to us a lot of speakers, and that has been very valuable for us as well. And would love to seek your advice and seek your guidance to be able to help young middle managers learn about fintech. And the whole idea to build this community, build this podcast, is to get people like yourself who can speak from their experience about how they manage to kind of navigate through this complex myriad of fintech. So the idea is that if you can, people like yourself can speak to our users and audience, and they can learn from you, that would be very, very valuable. So that's the idea of FinTech Town Square, and thank you for speaking to us.
No, Nate, thanks for the invite, and it's my honor to be participating here and contributing to your podcast. I hope it goes really well, and I hope that what I shared here would be useful. And glad to contribute, man. Anything for you.
Thanks, man. Thank you so much. So, even just to get started, would be really interesting to hear about your career journey. And I know that you've spent a lot of time at Modalco in funding societies, and you were a consultant before then. But would be interesting to hear from you in terms of how do you see your career journey? Where do you see yourself now, as opposed to when you started your career journey?
Sure. So I've been on this journey at Funding Societies Modalku for 7 to 8 years now. So started out being country head for Indonesia, what they call also the Indonesia co-founder, and then I picked up a few roles along the way, building up our risk function, helping us enter the Thai market, and building up also other functions in the company until now. And prior to that, I spent 4 years in consulting in financial services in particular, helping banks navigate through strategy and risk topics in Southeast Asia. And then before that was at Cornell. So I'm born Indonesian, lived abroad for a while now.
Right. Thanks, Ivan. Actually, Ivan, there are so many things that I could talk to you about, but something that has been both puzzled me and enamored me about you is your being able to learn so many different skill sets. And I remember when I joined 3.5 years back, you were the CEO for our Indonesia business. You were heading our business in Indonesia. You were also heading risk for us. And then in between, you helped us build a Thai presence. You hired a country head in Thailand, and you helped us expand that business. And then you moved trajectory and you became a chief growth officer as well. How do you learn about so many different skill sets, and sometimes this skill set might not be easy to learn as well, and there are no articles and books and courses that are available to be a growth officer, right, or to drive a new country expansion. So so I've always been puzzled and enamored, and I thought this will be a good opportunity for me to kind of put you on the spot and learn from you in terms of what your learning playbook is, and how do you manage to kind of get up to speed and ahead of the curve on so many different topics.
Maybe the funny thing is that since I was a kid, I was always hyperactive. So I always want to try something new, explore a new topic, and my consulting background maybe as well push me in this direction. Well, good question, and it's indeed true. I've picked up so many new knowledge areas, and I work on so many things in the last 7 8 years now that I can't even recognize myself from 7 8 years ago. And Perhaps what I can share today is my imposter syndrome skill, right? Which is how do you become an expert in 30 days kind of thing. To those who might be interested at all. And To summarize, I do have four steps, and I would share the four steps first, and then go into each of them. Right. So the first step is to identify the goal in the domain that you want to solve for. What are the most important goals to you? The number two would be to achieve the goals that you want to achieve. What are the top problem statements or the top issues you need to solve for? And then number three is to determine your confidence level on each topic and level of understanding as well. And then finally, seek out the right resources, internally or externally, to solve for them. It may sound very easy, but it's actually not that natural. It doesn't come naturally to a lot of people to take this systematic way of learning a new area. I can give you an example of how I picked up perhaps M&A or investments, things like that, right? So let's look at M&A as an example. So one of the goals that I was looking at was a decision, and the decision it was to decide on a deal. Do we want to acquire a company or not? And in fact, over the lifetime of the last 2 3 years, less than a lifetime for sure, 2 3 years, I have seen easily 10 to 15 deals available, or companies available to be acquired. Given the deal flow, there were often decisions. What do we do, right? Obviously, I would reject most of them early without even bringing to management. So, but the decisions require competency, right? And hence, I need to study how do we decide, and also what do we do after the acquisition, right? Because the acquisition is only the first few parts of it. So, by identifying the goals, I can then look at the problems, the concerns, right? So that involves speaking with our management, our board, understand their concerns, and this could include things like what do we do after the transaction. It could include things like how do you ensure that you have enough bandwidth and capacity to handle the transaction, and then it could include things like how do you assess objectively an acquisition, things like that. So broad spectrum, technical, less technical, things like that. So based on the different problem statements, I would then determine where I'm more confident at and where I'm less confident at. So for example, oh, I've done some work in change management before in a large bank, but I haven't done a full blown M&A change management deal, right? So that for me was an area I want to learn about. I've done some diligence work before in consulting in commercial diligence. Our CFO has done a lot of work in M&A, so on that part, so that was helpful. So based on each area, I then figured out that I need to speak to a few experts. So point number four was around resourcefulness. So I combine speaking with our CFO and even our uh, chief talent officer who has experience also doing M&A work, and I realized that there were still gaps in this capability. So I ended up speaking to three or four experts externally to plug the gap, including global M&A heads, Southeast Asian bankers, North America founders, even founders locally in Indonesia. So at least three or four, I'm sure there were more that I spoke to that helped me solve different problem statements at different times. But that's how the four-step imposter syndrome framework I had put into play over the years.
Right. I'm uh, to be honest, while you said imposter syndrome, to me it seemed to be a very careful mapping of the skill set and a very clear articulation of what you're confident and what you're not confident of. So, frankly, and just to be, and I'm not trying to be nice because you're on my show, but I do believe that it wasn't as much about being an imposter, and it was more about being articulate and being aware of what your gaps are and being able to seek experts help to kind of learn and bridge that gap. But this is very, very valuable, Iwan.
And I want to just chime in also on what's probably the most difficult for a lot of people, right? So a lot of people who would watch this podcast would probably be very, very smart and super competent and things like that in many ways. So would find the number one or two step easy, right? The likely tougher step is around the resourcefulness part, right? So because the thing is, what can I learn about certain? There's only so much I can learn about certain topics online or in books, right? And that's where I think having building that personal network over time, or having a mix of informal and established networks that you can tap into when you need help, that's very handy, and that's something that I deliberately worked on over the last 4 or 5 years. For example, one of my biggest help comes from Endeavor, which is an entrepreneur nonprofit. And Endeavor has been such a big help for me because we, between myself, Kelvin, and Cumming, who are part of the Endeavor network, we speak with mentors 50 times a year, 50. And can you imagine the number of topics that we talk about and the amount of learning that we got? Right. So that's an example of tapping into an established and formal network. And also, I'm very thankful to be friends with quite a number of founders, personal friends, acquaintances, things like that, that can allow me to solve issues on the fly. Right. So I think as folks think about learning, like this part could be crucial, or a limitation even over time. Right.
No, I agree. I agree. To be honest, I think you and I have spoken a lot about this, that how our learning approaches are so different sometimes. I think for you, reaching out to somebody is your default action. For me, the default action is to read something. And I think there is a lot of value in mixing both the approaches, because a lot of things that you want to know might also not be available as a written content. So I think both these approaches make sense. And I do agree that just building that network of mentors, network of advisors, on hand and off hand, could be very, very valuable to grow as well.
Absolutely, man.
In fact, one of the things, I forgot where I read this, but I was reading an article and it was about first principles. And then the article makes an argument that, while you want to do or solve problems by first principles, sometimes second principles also make sense, in the sense that you learn from someone who's already solved that problem. So that was one. And the article goes on make the case that think about yourself in being a war. So rather than imagining that this is your job description and this is what you're solving for, you kind of figure out and navigate at every point in time what's next and solve that problem as if being in a war. And
Mm,
that to me was also very clarifying sometimes, because you really don't know what you're solving for. Like in our industry and in our domain as well, we have seen that things change so quickly, so fast. And therefore, blinded by what you know, being blinded about what your job description is, what your role is, you
mm,
can be not as effective. And therefore it becomes very important to keep reinventing yourself. And having an external board of mentors can be very valuable in terms of
mm.
reinvention and learning those new skills as well.
I got it. Yeah, yeah, that's true. That's true.
So even you mentioned, and a very valid point, that that some of the people might struggle from having that board of advisors and mentors. Do you have any advice for the young managers who are looking at this about how how can they kind of build that mentors and advisors? Is there a playbook that you have used, or is there
Mm.
advice that you would have for them?
Yeah. So what I built for myself is what I call a future-proof network. Because the thing is that in the role that I play, which is and we play in it, right? So senior management slash even CXO founder type role. The number, variety, and complexity of the problems are just so many. You need to have people with different walks of life experiences. While a manager, right, may that be a product manager or a risk manager, who have more domain specific things they should learn about, right? So the network of mentors then would be different, right? Um, Interestingly, when I was picking up growth, which is, you may argue that a product manager might want to pick up growth, right? So then, hey, then who would you choose as your growth mentors, right? So I picked, so well, I wouldn't say I picked, but I spoke with a number of different peers and people at different levels, because what a founder knows about growth, and a senior person would what a senior manager would know about growth could be somewhat different at the level of detail, and also at the perspective which they have of the same function, right? So for example, a founder or a CXO may speak more about the organization of the growth function and the impact of the growth function on the overall organization, while the senior product manager or senior growth manager would speak more about the projects and the technical skill sets that they know about and what they have and what and how has that been exciting, right? And being able to combine these different sets of information gives you a full picture, right? So if a if a manager could access the one or two founders or CXOs, and also someone, perhaps 5-10 years in, and exchange information in that way, that could be a very interesting mix of information.
Nice. No, this is valuable. Yeah, this is super valuable. And I think what I'm also learning from you, Ivan, is that you are very thoughtful about some of these decisions. So I think you have also made it a point that the learning playbook or finding mentors and advisors, you have been very thoughtful, and therefore you have been zooming in and zooming out of that as well very quickly to be able to make sure that it's a playbook of sorts. It's something very repeatable for you, and it's something that has worked for you immensely. So I also see that trait. While you may or you may not articulate that, but that's something that's very, very clear in your approaches and solutions as well.
I try. It's often a need as opposed to a
Hmm.
want. I need to solve it really fast for the company.
Right.
Uh,
No, no, fair enough. So even one of the things that I was wanting to kind of lean on your expertise was risk management. That was a big part of your role at funding societies Modalku, and sometimes it can sound very or very gory, very very lot of details. It could be slightly overwhelming as well to build a risk function. And again, a lot of this content is material is not available out there. So from your vantage point, and in fact, when I got into lending like 5-6 years back, sometimes you think about credit as a risk or fraud as a risk, but then you realize there's so many other variants of risk as well: technology risk, compliance risk, regulatory risk, and so on and so forth.
yeah, yeah.
So from being setting up a risk function, how would you and given the fact that you are master of playbooks now, how would you advise someone to think about risk? What role does risk play in a lending business as well, and how would you advise somebody to build a function like that?
Yeah, I'll talk about something else and then how it relates back to risk, to make it interesting. So when I speak to a lot of new entrepreneurs and even perhaps PMs who are trying to get into fintech, they often talk about the opportunities, right? The opportunities in the field, and of course the challenges, right? But a lot more of the opportunities usually. Uh, uh, what they often forget or not know about is that a fintech company is a creature of regulation. Is a creature of compliance, heavy compliance, and the more mature and a financial company, the more regulations that it will face, right? So and given the level of intensity that compliance has on the industry compared to maybe a different industry like e-commerce, for example, naturally, um, the there's a lot more influence that regulations play in our lives every day, and one big part of that is risk management, right? Um, in fact, compliance is set up to aid risk management. So the starting point of where I look at risk management is compliance, right? And because if you look at risk management in different countries, and let's say you look at extreme cases, uh, let's say peer-to-peer lending 5 years ago in Indonesia versus what we have perhaps in in UK 5 years ago, uh, the level of regulation will be quite different, right? So in fact, when China rolled out regulations for peer-to-peer lending in, I believe, a few years ago now, so leaving it unregulated, so For context, peer-to-peer lending in China was unregulated for 10 plus years, and it suddenly became regulated, so many fintech players were destroyed or unable to continue operating in the way that they used to, right? So, and the main reason is because of the risks that have been emerging for the last 10 plus years when there was no regulation. So the regulation was meant to kill so deep, like a bit of a cancer treatment, right? As opposed to a band-aid on something that is just starting to hurt, right? So that is just the complexity and this relationship between compliance and risk management. And I can talk for more time on this one, but in short, the influence of risk management is very deep in our industry. Compliance plays a huge role in that. The maturity of the regulators also and the regulations will play a big role in that. And depending on the maturity, you'll find that the demands on the risk management will be higher or lower. And then the company may also choose to do more or less, depending on whether or not the company feels that they want to uphold higher standards or lower standards. Happy to share more about these, and I hope this helps a little bit of the topic.
Yeah, compliance risk and compliance itself is again a two-edged sword, right? So you understand where the regulator comes from, where the government comes from, depending upon their priorities. For example, when you look at emerging markets, they want their customers to be safe, and when you look at slightly more developed markets, the priorities of the government, the regulator, is to be more convenient and to make things easy. So therefore, being able to figure out what the regulator wants is also not only from the point of view in terms of they're impeding your growth or impeding your aspiration, they're also protecting their customers and their citizens as well. So it's very very valuable to make sure that you understand where the government comes from and be on the right side of it. One of the topics that I think would be extremely interesting, and I was reading this book by Psychology of Money by Morgan Housel, and he talks about tail events, and he said that a lot of outcomes in business and finance are tail events, which is events that you don't plan for, you don't factor for, and they have a big influence on how the outcomes of business and finance comes in. He goes and also makes a point that the moment you accept the implication of these tail events in business and finance, you get more comfortable with making mistakes, you get more comfortable with breaking, falling and failing. However, it also has a business impact, it also has a risk, right? So how do you think about credit risk from that lens in terms of these, like how do you even factor and think about these long tail events, how do you plan for that while not affecting business on a regular run?
Yeah, a lot of the work that I did on risk management was to help us avoid tail events. And one of the obviously tail events that happened was COVID-19. And I did a lot of work there to help us navigate through that. And and so in the lending business, well, there is credit, which means you approve a loan, and then there's collections, right? These are what I consider credit and collections operations, right? And to some extent automated, depending on the extent of automation in the country and the products and segments and things like that. And then what the world of banking calls the second line of defense is typically then the risk management function, right? And the goal of the second line of defense is to challenge the first line, is to advise the first line, it is to help mitigate the risk of the first line. And and part of that work includes activities like scenario analysis, right? So typically, if you look at the various risk types, operational risk, business risk, liquidity risk, and so forth, you would measure risk events by impact as well as frequency, right? Tail events are typically super high impact and super low frequency, right? So in the credit risk, you would have economic failure. You would have um, large industry concentration collapse, uh, things like that. Global financial crisis as tail events, right? So we actually have modeled out things like that to some extent. I don't think we were that fancy, given that when we started to do this analysis, we were about 5 year old company. So and we're not like a 15, 20 year old bank that has accumulated data and data over the years and compiled data across the world of banks. So what we have was some sort of a simple but good enough scenario analysis based on like three scenarios. And when COVID-19 hit, I recall we spoke. So back to that imposter framework, right? So what would you do if you don't know what to do? Spoke with a few people who had seen different events, and quickly within the same week, we so I asked all the credit risk managers in all countries to completely change the policy in a certain direction, right? And that was how I think the awareness and the function, presence, and the role that it plays really comes into play, right? So the more sophisticated the company becomes, obviously the more events that you would try to model out, and the more advanced modeling techniques that you would use.
Right. Okay. Makes
Mhm.
sense. So, so if I understand this correctly, what a few things that I took from you, Ivan, was that from credit risk, there is of course credit risk and credit operations and compliance operations, and the second line of defense is the risk management. So you have to make sure that you create rules and playbooks so that you don't get as impacted by those trade events to your credit teams and the collection team. So you have to build that playbook and the framework, and in order to build that framework, what you need to do is map out scenario analysis, and you have to figure out the frequency and the intensity of certain events, and you have to map that if certain event happen at what severity and what frequency, how will this impact your collection and credit teams. So that becomes an input, and that becomes a feedback loop between credit collection and risk to uh,
I like how you mentioned framework, Nate, because in risk management, it often starts with the risk appetite, which is part of a framework. And the framework always looks like a house. It's very boring, but it looks like a house with pillars. And then scenario analysis is typically a process within the house, right? Um, and then data modeling would typically look like somewhere underneath the house, right? So the combination of data modeling with scenario analysis as part of the house would allow us to achieve the risk appetite that we have as a company. So that's how different, I would say, organs come together to create a body.
right. Actually, while you were speaking, Ivan, one thing struck to me that you were heading risk and then you shifted course and became chief growth officer. Is those two contrasting roles an impediment now for you, or is it a support or a facilitator? How do you think about that career choices, and how does they both impede you or grow help you grow as a full bodied CXO to drive growth for a company like ourselves?
It's funny how you you say would it impede me in my role in chief growth or not, and I would say it's been more of a blessing than a curse. And the reason is because at the end of the day, if you're when you're a CXO of any company, you need to know the other side, right? So even if I lead growth, I need to know, hey, the work that I do in growth, how is it impacting my risk metrics, right? So I would say more helpful than not.
So again, touching back on your learning curve, being able to learn new things, what are some areas slash topics are of interest to you as Ivan, who's of course helping FS and funding societies in Modalku, but also the larger ecosystem around what's happening in fintech, emerging markets, developed markets. What are the topics that keep you excited, and then what can we expect Ivan to be learning next, given those DNA that you have to be impatient, to be anxious, and how do you think about some of those journeys as well, Ivan?
Maybe what keeps maybe less of what keeps me excited about what I always try to keep an eye on, right? Could be, and then usually within those areas, some things would either excite me or some things would shock me. So I would typically look out for trends in three areas, and that would be something standard, right? So market, industry, and regulation. And I do think that every CXO to some extent, I wouldn't say extreme ends know everything, but to some extent should know a bit of, right? And for me, the way I get my information are a mix of obviously formal and informal sources and read and people discussions with and so forth. And the I think the market part is perhaps a lot more intuitive to people, right? That you got to know the customers. And I think for me, what I found the most useful is just being able to seek counsel from a lot of discussions with VCs and startup founders on what's coming up, right? And from what's coming up, I know like where the consumers are headed towards. So, for example, uh, seeing more people eating up EV bikes so fast, right? EV cars so fast. The appetite for EV is a lot faster than I expected. And seeing how things like digital invoicing is growing a lot faster in the last couple of years. Just speaking to different people, the extent of the information I get to know. And then on the regulation side, that one is also crucial because a regulation can make or break an industry, and then you want to be able to know it early and be able to affect it to some extent if possible. So I get my dose of that from the association I sit on the board on, the FinTech Association, as well as uh, my peers at the FinTech Lending Association, which is now merged under one, by the way. So the FinTech Lending Association of Indonesia is now merged with the FinTech Association of Indonesia under one roof. So information there, and by speaking with, and also by looking at the news quite a bit. So I think all these things together either excite or shock me, depending on what comes up, I guess.
That's a great framework, yeah. Sorry, just to clarify. So, market, you talked about talking to customers, talking to VCs and founders who will figure out and help you understand where the market is headed to. Then you
and and,
talk.
all, and there's a lot more to that, but I just gave you some examples
Correct,
on
correct, correct.
yeah,
So
yeah.
that's fine. You also talked about digital invoicing. So is that an example of industry or is that an example of market still?
Mm, so I speak with industry to understand the market. So the consumers' adoption of digital invoicing would be interesting. For example, how much they use digital stamps, given that digital stamps regulation was only announced last year, uh, going live, right? So that uh, keeping abreast of the industry allows me to understand changes in consumer behavior. That's what I was talking about earlier.
Maybe a slightly curious one. So when you talk about industry, right? How do you define the industry? For you, the industry is SME lending, the industry is SME tech, the industry is fintech. Like how where do you draw the boundary, if at all, or do you kind of go all the way down?
Yeah, that's a very good question. And the industry would definitely be our SME lending industry first and foremost. And then I would seek to then learn about the ecosystem.
So very interesting to know about your learning process, how you handle risk and manage risk, and how do you keep up to date in terms of what's happening there as well. The other thing that I wanted to speak to you also was, and because this podcast is for helping middle managers kind of break into fintech or do well, are there, when you hire for people, right, is there a gap in terms of either skill sets or attitude or functional capabilities that you want a lot of middle managers to be, but you just don't find enough of them? This could be like as broad as product managers, risk managers. It could be very specific as well, and you can speak to both functional and attitudes that you may not find in the market as well as much.
That's a very good question because talent is known to be an issue here in Indonesia, and I'm quite sure Southeast Asia too. And if I can cite some data, right? So a fintech association member survey from the last 2 or 3 years, I believe, talent in data technology slash engineering and risk management is in the highest scarcity, right? And when I speak with founders and I look at surveys there as well, product managers and growth marketers are very lacking as well, right? So from a quick lay of the land on the technical side, that's what I see missing. When I interview people, obviously the question was about my choice, right? What I wish they have more of, things like that. I can start perhaps from my criteria of interview, typically, what I look for in people. So, number one, I would look for grit, right? Because life in startup is often not a straight line, but curves. And you may not make it to the next curve if you don't go past one curve. And number two is critical thinking, being able to go back to first principles, being able to think structuredly in a structured way is often crucial as well because you often need to digest, break down information into useful parts that you solve for later. These two would then determine for me the potential of a person, right? Everything else I think is easier to assess or easier to find, right? So, well, not true because I did mention that all those five roles earlier were hard to find, right? So on the technical sides, these are lacking in the country already. But finding the combination, so if you add that talent scarcity along with, hey, I need to find someone who's a good critical thinker and great resilience, good luck. Very hard to find. So I always find someone like that a gem.
And within, let's call them technical roles of data engineer, product managers, growth managers, how important do you think is being aware of lending as an industry or being aware of payments as an industry? Do you see that a must have skill? Do you think it's a good to have skill? How do you think about that cross pollination of domain within what we're building together?
That's a very solid question, and it's a good one because you would want someone to be able to arrive here ready made, right? So my answer is based on the availability, so the need and the availability of talent, the supply demand, right? So if I know that this role is has a scarce talent pool, I would demand less on someone knowing lending before, and especially because lending of every company's lending could be different, and also you look at the talent in the market. At least in the first 5 years, it was mainly banking and multi-finance talent, right? So they may not really understand fintech, things like that. So their lending may not be what our lending kind of experience, right? So I would then value someone who has the grit, who has the critical thinking, uh, and then some of the foundational expertise area in that role that I'm looking for, and then teach that person lending, right? So depending on the urgency of the role, importance of the role, and the supply demand, I would then somehow figure out something there. And often then you realize that you often push to make a decision, right? Everything on the hit, we often push to decide do we take someone or not, right, to work with us, and then it's an optimal decision.
And while this is yours, you are the guest here, but I would also encourage anybody who's listening to this is that do think of the Ivan's for part of learning process, and do make sure that even if you're a part of a product team, engineering team, or data team, do make an attempt to learn the business side of things as well, and vice versa as well. So people on the business side do make an attempt to figure out a project that's been in the company, find a problem statement that needs to be solved, assess your confidence level, make sure that you find experts internally and externally. I can promise you that that can significantly enhance how your effectiveness and how you will do well in your career as well. Yeah, so I just wanted to make that plug because I thought it's important.
Absolutely, absolutely.
So, Ivan, you talked about markets and customer behavior as a topic that is of interest for you, that you kind of keep yourself abreast about. Are there customer insights, are there things that you know or you think about SMEs which is fascinating, which fascinates you, which you think is truly Indonesian in nature? How do you think about that behavior which a local like yourself would know and somebody from outside might find it very intriguing and exciting to know about?
That's a good question, and let me try to see what I can find as highlights. Right. In general, I think SMEs here, the top two priorities would be not inefficiency improvements.
Hmm.
I wouldn't even. They wouldn't even look at things like cost, even though they know that it's a problem. But the top
Correct.
two needs would be grow my business, help me grow more, right? Number one, and number two, help me access capital,
Hmm.
right? That's why we even exist, right, in this country, in this region. And then some may admit it, some may not admit it. They need the talent. So
Hmm.
Indonesia is lacking managerial talent,
Hmm.
in particular, and that's stifling a lot of companies to be able to reach that next phase of growth,
Hmm.
right? Because at a certain point, if you're only an owner-run business, you can only run to a certain point.
Hmm.
There's no way you can go beyond. Uh, and there's often this trust factor. Can I trust the
Correct.
professional to run it or not?
Hmm.
Right? If I take a step back and look at overall SME and fintech,
Hmm.
right, as a topic, COVID-19 has done a lot
Hmm.
for fintech. And I remember before COVID-19, it was difficult even to get some young entrepreneurs to use us. And that was similar to what a lot of other fintech companies faced.
Hmm.
But because COVID 19 drove a lot of FIs, financial institutions,
Hmm.
or banks to stop lending,
Hmm.
while we selectively lend based on the industry, there was so much demand that came in. We served obviously some,
Hmm.
not most of them. But since COVID and now going to now, I've seen a lot more younger generation SME owners
Hmm.
come to us and other fintech companies as the first option, as their first option.
Interesting.
So I think that tipping point has arrived,
Hmm.
whereby for the millennials, to some extent, the older Gen Zs that
Hmm.
who have become entrepreneurs and so forth, that fintechs is the place to go.
Nice.
Right. So very interesting. So a lot of issues, a lot of problems that I called out just now,
Right.
which means obviously a lot of opportunities for
Correct.
startups to solve for.
Right.
At the same time, very interesting trend of consumer behavior for fintech.
No, this is exciting because I remember, building or trying to build a referral program for an SMEs like long back before COVID times. And we were very excited about building a referral program. And then we realized when we talked to SMEs that they don't want to tell people that they have to take a loan from a fintech, because in their mind they have to take a loan from a fintech. So that was the perception, which
Oh
means
yes,
that a bank did
yes,
not
that's
give a
so
loan to
true.
them, and it's
That's so
not
true.
what they would. And then if you don't have that behavior or excitement, why would you tell somebody that refer and do so on and so forth? And that was such an eye-popping insight for me back then. And it's
Yeah,
interesting to know that how at least younger audience, Gen Z's, millennials, after COVID have started to look at it differently, and maybe a sign of great things to come as well.
yeah. I've not heard that stigma ever since, but that used to happen. That used to show up a lot in
Right, right,
conversation.
right, right. Yeah, and then we used to think. In fact, I always thought about that fintech. I mean, we should always have a product manager to solve for trust, because it's such an important topic. It's such an interesting topic, that how do you build that trust in an online world wherein people are used to do things in a certain way, and maybe because of onset of COVID, while it had its own downside, but may have at least subdued the problem to a big extent about
Mm,
this lack of trust, and maybe things have move towards being more convenient and more accessible. And think I hope that that's more important for SMEs now.
I think so. Yeah.
So even we talked about a lot of things. We talked about your journey as a business head, as head of risk, as head of growth, M&A, country expansion. A lot of times you would have made formed opinions about certain things, and I'm sure that most likely you would have been right about most of these things. Does anything strike to you something that where you were awfully wrong, where you're like embarrassed to a certain extent now, that looking back, that how could I get it so wrong? And just to make it easy for you, I can give you mine. So 2013, 2012, 2013 India, a lot of companies were making a shift towards being a mobile app based companies and products. And at that point in time, India was largely desktop. And I was like, how stupid are they? Like a device that small, how will people move in that direction? And it's so you can't do so many things. And I definitely missed. I think I lost 6 to 12 months in terms of figuring out how this big this is going to be. So the moment when I heard about this and saw the companies moving, I thought it's going to be it won't move in that direction. But that was something where I'm embarrassingly wrong on a technology wave.
Yeah, it triggered my memory of a time that we wanted to serve the micro businesses,
Mm.
the warungs in particular in
Nice.
Indonesia, and we knew that we could serve a lot of micro businesses online,
Mm.
particularly those that are online sellers, those that are perhaps more digital nomads, things like that. So digital companies, by acquiring them online. But the warungs, we felt myself and we had a leader and we had a team that assessed that the warungs didn't really have much digital track record in terms of their financials, activity, not
Right.
even bank account. So you got to go offline to serve them,
Mm. Mm.
right? And we did,
Mm.
right? And what happened was during COVID-19. So 1.5, 2 years into that, COVID-19 hit and a lot of warungs disappeared. Uh,
Yeah.
we were able to recoup some of that loss,
Right.
but not a lot of it. And for me, my learning was that we might be trying to do too many things for too many people,
Mm. Mm.
right?
Mm.
And the things that you can actually draw many learnings from this,
Mm. Mm. Mm.
right? You
Mm.
could draw that, hey, you don't know the full extent of the risk reward, right?
Yeah.
Because I still remember before COVID hit, we were making some profits on some cohorts already,
Correct.
and we were serving these customers in a very satisfying way because we see a lot of first time
Mm.
banked
Correct.
customer, satisfying, meaningful. However, COVID hit, right? So we could conclude that we don't know the risk, the true risk of this,
Mm. Mm.
right?
Mm.
Um, we could conclude that it was a failed project,
Mm.
right? That delivered nothing.
Mm.
We could also conclude that we were trying to do too many things at the same time. For me, I my conclusion was that I think focus is important increasingly now when there are a lot of more there are a lot more digitally competent players. I think we can choose to focus. So I would say that is one of my areas of learning. I would highlight to you.
Right. And like a few minutes back, I asked you, how does being a head of risk helps you or impedes you as a chief growth officer? And I think you mentioned a very nice point, and I think, and now I'm very confident that it's actually helping you that impeding you, because you understand at least the full wrath of risk, and you understand the full framework to kind of solve for that. So having that mindset, having that clarity would probably always be helpful when you are building new markets, new growth, and new products as well.
Absolutely, and hopefully the point that you saw was the one that I called out, which is that a lot of new to fintech people or new to fintech lending people will not use cohort analysis correctly.
Correct,
Look
correct,
at
correct,
risk performance and then correlate that to the profits,
correct,
to look at the risk adjusted returns,
correct.
right? But it might look at things like NPLs, which are more actually for regulatory reporting purposes,
Hmm, hmm, hmm.
as opposed to looking at the
Correct,
true portfolio health today,
correct, correct,
right?
correct.
So knowing the different nuances does help,
Yep,
and,
yep, yep.
and I would call it out.
Cool. Even a few light-hearted question to just kind of cool down the exercise. What's a book that you would recommend middle managers, young folks, that has helped you when you grew up, and even if you're reading right now, somebody who's listening to this would strongly recommend them to read one book.
I might call a book out that might surprise a lot of people because it's
Sure.
not technical, it's not too scientific or
Hmm.
cool. Uh, in fact, I would volunteer two books.
Okay.
Right? So the first book I believe changed my life for the better. It's made me a all-rounded person, and the
Mm-hmm.
book is "How Will You Measure Your Life" by
Yeah.
Clayton
Yes.
Christensen.
Yes.
I love that because it just shows you how human beings are
Right.
uh, finite creatures. We can only think and do so much.
Right.
Don't forget to put relationships and family in there,
Right.
right?
Yeah. Yeah.
So
Yeah. Yeah.
that's powerful. And the other one, I'm not I wasn't I'm not sure if it's a book or but I know it featured in HBR Harvard
Mm-hmm.
Business Review, right? It is by Daniel Goleman about the leadership that gets results,
Ah. Okay.
right? The reason why I want to point this out is because oftentimes managers, you said managers earlier, right? So
Right.
managers, new to managers, or even CXOs see leadership of leading in a certain way,
Mm.
right? That it is one way or the highway, right? But this book or article or research from Daniel Goleman points out that there are actually six styles, six different styles
Hmm.
of leadership. That four of them has a positive mood and two has a negative mood. And
Hmm.
the most effective leaders know how to use three or four styles at the least, right? So
Okay.
that has helped me lead better. I hope that helps others lead better
Yep.
too.
Thank you. And thank you so much for doing this, Ivan. And if there are young managers, young folks who want to reach out to you, what's the best way to get connected with you? Is it over Twitter, LinkedIn?
LinkedIn is the best. I would
Okay.
love to connect. Please shoot me a message.
And thank you so much, Ivan, for doing this over a weekend while you were unwell. Really, really appreciate this. And I had a blast having this session. Thank you so much.
My pleasure, Nihit. I hope this was useful.
Yes, very, very useful.